Right, the numbers are settled down, so welcome everybody. Welcome to another Property Thursday. Really looking forward to this one. I do love a good launch. And so, the home of Manchester, the home of Manchester United, Manchester City, Coronation Street, the Manchester Ship Canal, just a historic, fantastic city, which led the world in textiles all those years ago and now has gone through some unbelievable regeneration. I'm delighted we've got Mike Layton on. He's the Managing Director of API. Sam Phillip, he's with Salboy, and Salboy is a fascinating company. We'll get onto that in a minute. And of course, Lewis, who we met only a couple of weeks ago. So I'm really looking forward to this. I do like a launch, as I said. So Mike, tell us all about API and where you fit in.
Hi, Chris. Hello, everybody. Great to be back on the webinars. So just to give you a bit of background, I founded API Global in 2013 in Dubai originally. In a previous life, my background was as a chartered surveyor for some of the largest companies in the world, CB, Richard Ellis, DTZ. I held senior roles in UK, Hong Kong, and the Middle East regions. So a well-rounded global understanding of clients, client needs, client dynamics, etc. I got my MRICS, which means I'm a fully accredited member of the Royal Institution of Chartered Surveyors. And I made the move into residential really to take a slightly more regulated and professional approach to how residential property is managed on an international level. It's an unregulated asset class. Which means anybody technically can enter the market and try their hand at it. So I thought I identified a gap to doing things slightly different way, and that's why we associate with the likes of Holborn Assets, because they're a regulated entity, they're in the finance game, and that's the kind of people we like to work with internationally. We've got 6 offices, as you can see on here: London, Dubai, Hong Kong, KL, Nairobi, and Cape Town. And we have teams in each of those offices to support our regional partners, such as Holborn Assets. Okay, just next slide, please. And in a nutshell, I won't talk too much about API because we're not here to do that. But it's important that you understand how API and Holborn work together. As a joint venture, if you like, we offer an end-to-end solution to international investors looking to build a property portfolio, a balanced property portfolio in the UK. And there's 10 steps really in how we do that, the makeup of the end-to-end solution. And I'll just briefly take you through those steps. The first one, step 1, is for me probably the most important, which is the research. Okay, so my team in the UK, they track market indicators. We look at the next areas that are expected to generate capital growth, attracting decent yields. We look at indicators, market indicators such as fiscal policy, government spend, corporate relocation. A good example of that is the BBC moving to Manchester, right? Let's keep it consistent with what we're talking about today. Infrastructure, so the HS2, many of you will know what that is. If you don't, it's a high-speed train network that's being developed to connect the regional cities in the UK to the capital. So things like this, education is another one I'm just thinking of. Things like this all help identify the next best place in which to invest. And that's really a very, very important part. Step 2 is where we actually engage the likes of Salboy and secure investments that we consider to be the best in class. And with that, we have a 121-point due diligence process whereby we look through the investment and make sure that everything's in order, such as planning permission, site ownership, the funding is in place, etc., etc. So again, another very important part. Step 3 is where Lewis Finn, who's on the call, would come in. He is the API account manager who supports the Holborn accounts. So he would work with consultants to help the client select the right opportunity for them. It's not just about putting an opportunity in front of a client, it's about understanding the client, what works for them, what's their risk profile, and then we can select the right opportunity for them. Once you've reserved a unit, you then go through to the sales progression, and we have a sales progression team in London who will support you through the legal process and introduce selected preferred conveyancing firms, as in point 5 here, the legal support. Okay, so we're really there alongside Holborn to help you through every step of the process. Once you've exchanged contracts, you then it's essentially a waiting game until the development is completed. And as in point 6 here, we will provide constant or periodic construction updates to keep you abreast of where the development is, etc. Within 6 months of completion, you can start your mortgage process, and the mortgage and completions team at API, alongside and with Holborn have got the facility in-house as well. We will make sure that you get the right mortgage in place and you can complete on the investment. And then afterwards, we have a lettings and management and a selling, an asset selling offering as well, should you need that. Okay. So why invest in property? I think it's good just to look at the basics of property investment and why you should focus. You can see here, this is actually a photo, a CGI of 55 Queen Street on the left-hand side above. And some of you may recognise the green and grey building to the right being Blackfriars, with the Blackfriars pub sitting just below. We obviously were heavily involved on this development with Salboy. And that proved hugely successful. We've got many very happy clients in there, very happy investors. So why property? Medium to long-term wealth generation. You know, it's not a fast cash game. We'll talk a little bit more about how you generate that wealth through property investment. But the key thing is it's a medium to long-term wealth generation. So you park some capital and then you can sit back for a little bit and let the property do the work for you. There's two ways to generate wealth through property. Yield is one, which is also known as your rental return, and capital growth, which is essentially how much your property increases on an annualized basis. Ability to leverage. This is probably for me the most important part of property investment, and we'll touch on that in a little bit, and I'll talk to you about the power of leverage. We then have the other point here, which is a staple part of a balanced portfolio. Bricks and mortar should form some part of a client portfolio. It's a low risk asset. It's got a huge secondary market, so you can easily get out of the investments if you wish. Because it's medium to long-term wealth, it's usually a low risk asset, and it's a good hedge against inflation. Okay. Now, just looking at some trends and a few statistics to back up what we're saying here. This is a view of the National Real House Price Index, okay, that looks at the property values versus time. So along the bottom, you can see time since 1983 to 2021, and then on the left-hand side, you can see the increase in property value. Now, the blue line is the actual average house price index, okay? And you can see there's peaks and troughs. That's completely normal. You know, it's a long-term investment, and therefore it will be, it will play victim to some financial crisis, etc., etc. But what property always does is come back. Okay, it's a cyclical investment, and if you look at the trend, and essentially the red line, just draw the trend straight through the middle of the property values, you can see that over time it increases. Okay. So it's a very simple representation there. Just having a look at some facts and figures from Rightmove now. The average house price in Northwest, you can see most areas in the UK are still increasing. This is July, so this is on a monthly basis that this is produced. You can see West Midlands, Wales, Northwest, all increasing. East Midlands, so Northeast, which is fantastic. London still is playing catch up a little bit. But we're focusing here on the Northwest. There's been a 0.6% increase monthly change since June, which is significant on the average house price, which currently sits at 225,000, and the annual change is 8.1%. So it's huge. There's a huge positive impact, really, of COVID on the property market in the UK. If we go on to the next slide, so here we just look at the national average asking price. So the asking price is how much somebody will put it onto the market at, but it's a decent representation of the general confidence in the market, okay? If you look at the top table, you have June 2021, the national average was £336,000, versus July 2021, which is £338,500. So there's almost a 1% increase in just 1 month there on national average asking price. Okay, you can see the average annual changes as well there, which are significant. Yeah, and then let's jump on to the next slide. This really, as an investor on today's call, is the most important slide. It's a 5-year forecast on capital values per region. This is from Salboy, who are a very well-respected corporate real estate company, and this is their 2021 forecast. Had you have looked at these numbers last year, it would have been a slightly different picture. But I'm delighted to say there's been a very positive, as I said, reaction to COVID. Lots of people moving house, lots of people looking to upsize, more people working from home, therefore requiring higher quality offerings. And if you just look through here, let's go straight down to Northwest. We're looking at over the next 5 years, Savills are projecting a 28.8% capital growth as an average on property in the Northwest. So that is significant. It's the highest in the country. So the next 5 years looking extremely promising. And this just shows here in nice, big, colourful numbers and letters what we're saying there. Okay, so fantastic news for the Northwest. Hence why we've got one of our key partners on the call with you today to introduce a new Manchester-based investment. Yes, Christopher.
Other People's Money is The Power of Leverage. It's a film, Danny DeVito, about the life of Lawrence Garfield. It's called Other People's Money. It's worth a look, but that is all about the power of leveraging. Save you going on, and people can watch the film.
Yeah, okay, great. Thanks for that. No, cheers, Chris. I've not actually watched it myself, so I should probably watch that. But failing that, I will talk you through it anyway. So the power of leverage.
Okay.
Look, I can't stress enough how important leverage is to build a successful property portfolio. We advise every client globally that they should explore leverage. So very few have trouble getting mortgages. Oh, sorry, that's the front door. Very few have trouble getting mortgages. So it's open. There's lots of options for lending open to global investors. So I would always urge you to have a look. And the reason being as follows. So we're looking at Investor A versus Investor B. Investor A is a cash investor. Investor B is a mortgage investor. They're both buying the same £250,000 apartment. Okay, Investor A buys cash, £250,000, and the capital appreciation, okay, each year is 5% for 5 years. So we're just using a hypothetical situation for simplicity. Okay. So after 5 years, now the interesting thing about capital appreciation is it compounds every year. So what that means is year one, it's worth 105%. Year two, it increases 5% on that higher figure. Okay. So it's for example, the end of year one, 5% increase is 262,500. And then the end of year two, it will be 5% on top of 262. So that's called compounding. Okay. What the result of this is in 5 years' time, your £250,000 investment is worth £319,070. Okay, which is a 27.63% increase, which actually isn't far off what Savills are projecting, is it? Let's assume the rental growth. So you've got to look. If you remember, I said there's capital growth and then there's rental. Okay. So let's assume rent grows as well every year, usually in a positive market, which is where we are. Let's say rent grows at 5% as well for 5 years. And let's assume for ease, it's rented at £1,000 per month, which is £12,000 per year. That generates a rental of £66,308 over a 5-year period. Okay. So in order to understand your return on investment or your profit, you need to add your capital growth. It's not realized profit, but it's still profit, right? It's still value. So your capital growth plus your rental over this 5 years is a total return of £135,000, 378, which as a percentage of your initial investment of 250,000 is 54% return. So cash investment into property is hugely profitable anyway, okay? So that's a great investment in anyone's book. Now, if we look at borrowing 70% of that money from the bank, it's a completely different investment. So investor B, 70% as a mortgage, 175,000, 30% cash deposit. So they need instead of 250,000, the investor B needs 75, okay? Plus some fees for stamp and everything else, okay? But let's just assume for ease, £75,000 and they take a 70% mortgage, okay? The capital appreciation, we use the same numbers and we know that that is £69,000, taking the value up to 319 in 70. Now let's assume for ease, we're looking at the rental. Let's just say there are costs of taking a mortgage, obviously. So let's just say that the rent is equivalent to the cost of the mortgage, which there's usually positive cash flow, okay, which means the rent is usually more than what your mortgage would cost. So you do have surplus cash. But just for the ease, take a conservative approach, let's assume the rental income covers the cost of the mortgage. So there's no rent return, okay? However, because the investor only invested 75K, okay, the actual capital appreciation, 69,000, as a percentage of their capital invested is 92%. So it's about return on capital invested, not necessarily return on the property value, okay? So you can see with leverage, it's hugely, your return on capital invested is huge. And obviously, if you've got 250,000, you can buy 3 properties instead of 1. So you can increase your portfolio quicker. You can build that quicker. Okay. Next slide. This is my last slide before I pass on to Lewis, but just we should flag this because it's still relevant. In the budget in March, the Chancellor of the Exchequer, announced a stamp duty holiday. The first ran until the 30th of June, which obviously now isn't relevant, for 0 stamp duty up to 500k for first-time buyers. But we are still within the second window, which is 1st of July to 30th of September. There is a nil rate band up to 250. So many of the, and it's a staggered, it's a leveled amount. So whatever the weather, it reduces your stamp duty significantly with the holiday. Okay, I'm going to pass you on to Lewis now, who's going to talk about a little bit about.
Thank you, Michael. That was very intuitive. Thank you. Lewis, sitting from, I believe you're in Holborn Towers.
I am.
You're in head office. This is fantastic. Okay, over to you. Let's Manchester. I love it.
Thank you very much, Chris. Cheers, Mike. So yeah, before we actually go into the development and you know 55 as a development. First, I want to talk about why Manchester, why we believe it's such a good investment case, why we partnered with Salboy on this development to showcase it to Holborn. Property is always about location, okay? Location. And choosing the right spot is crucial in getting the best investment for your money. Manchester is one of the top UK property hotspots. And that's majorly down to the significant role it played in the Northern Powerhouse and then the investment it's seen into the city and the suburbs off the back of that. You know, it's got a resilient construction sector, which now means it's a secure place to invest your money in, partnering with developers such as Salboy and Sam, who's on the call today. What we see in Manchester is it's a desirable place for a young population, young professionals, high-earning young professionals, which ideally make the perfect tenant, okay? It's got a strong job market. It's got extensive levels of development, which really drives the economic growth. You know, when we look at the research and due diligence that we conduct as a company, like Mike said, there's a 121-point checklist. We're really looking at areas that are benefiting from fiscal policy. So like Mike mentioned, corporate and economic relocation, infrastructure developments that are taking place, investment into the cities, but also higher education universities. I think one of the most important factors about why Manchester as a whole is that the student population, there's over 100,000 students. Now, 45% of students in Manchester, once they've actually graduated, remain within the city or the surrounding area. Now, if you think of almost like a compounding effect, 45% year on year that are graduating, remaining in the city, these graduates need somewhere to live, okay? The likelihood is after coming out of 3 or 4 years of university, the likelihood is they've not got particularly much money saved. They've probably got very little, in fact. They're not going to have a deposit to go and buy a house. They're going to need somewhere to rent. Okay, they're out in the big bad world now. They're fending for themselves. They're going to need somewhere to call home. That naturally adds a demand to an already undersupplied market. You can see one of the stats on the bottom of the screen. There's already a shortfall of 9,000 properties per year in Manchester. So when we've got 45% of students year on year remaining in the city, that's naturally adding to the demand. We can also see that there's a 98.5% occupancy rate within Manchester. Now, just to make that even simpler, if you think of a tenant, or if you think you've got an apartment and over 100 months, you've got someone in there for 98.5 months. 6 weeks out of that 100 months, it is vacant. They are unbelievable statistics, okay? And that's because of the young population we've got in Manchester, the young professionals that are driving the economic growth. What's also important is the corporate side of it, the economic relocation. So I'm going to go into a number of different companies, but like Mike mentioned earlier, we've got the likes of BBC, have moved their headquarters now to Manchester. We've got ITV in Granada, have also followed suit, but also companies like Amazon. Now, Amazon's an interesting company. It's probably one of the only companies, certainly in the UK, but if not globally, that was actually recruiting very heavily during the pandemic. Okay, a lot of companies sort of stripped back, tried to reduce costs. Amazon went through the roof. You've only got to look at the share price, how that increased. And that, again, is purely due to supply and demand. When people are locked up at home, can't get to the gym as an example, you're ordering free weights off Amazon. You're ordering exercise machines. You're ordering exercise bikes. That's added to a demand. Now, with that demand, that's increased jobs, which therefore increases people needed to be in and around the area. When we then hold that hand in hand with the graduates that are leaving university and remaining in the area, again, we're adding to a demand, okay? I always try and say to clients, to investors, forget it's a property, okay? We're purely looking at a return on your capital, and like Mike showed before, the power of leverage. Now, again, forgetting that it's a property and thinking more of it an investment. If you look at equities, if you look at direct stocks, when more people are buying than selling, the price can only go one way, and that's up, okay? We see the exact same in property. When the demand is outstripping the supply, the price can only go one way. Now, Salford, where 55 Queen Street is based, you can see a number of statistics on the bottom. So there'll be 40,000 new jobs being created by 2040. Again, when we've got new jobs being created in the area, that can either be from companies expanding or companies relocating. It creates a demand, it creates a need for people to be based in and around the city, okay? Infrastructure we touched on as to one of the concepts that we follow. You can also see there's £1 billion that's expected to be added to the Salford and Media City area in the expansion plan. And then you can see the population's also due to grow by 20% in the near future. All of these give us all the right indications, which is why Savills are forecasting Manchester to grow and the Northwest to grow so significantly. These are all leading the right way and pointing in the right direction as to why we believe it's such a good investment case. And again, just touch on a number of companies. Amazon, BNY Mellon, and the BBC are probably the main three we've got there, where they've now got their headquarters in the Northwest. Before we actually go into the development itself and talk about the different aspects and why 55, I'd just like to hand over to Sam. Sam's head of sales at Salboy. He'll explain a bit about who Salboy are and their previous developments.
Sam, can I just jump in there? I was doing some research, which is what you have to do for this show, and I was looking to see how you look after and treat the guys on site, you know, and I was intrigued to read what you actually do for your guys. Can you just give us an idea? Because I thought it was intriguing.
Yeah, absolutely. Touch on the construction side in a second. That's the unique thing about Salboy. We're a self-funded developer based in the Northwest. However, we also have our own construction company as well, as Chris just alluded to from there. So just to highlight that point straight away, we're very different the way that we think about things. We want to be different from every other developer, from the schemes we deliver to the partners we work with. Now, the construction side of things is great. So we have a couple of rules and regulations, but the guys are looked after really well. We have no phones on site apart from during lunch and break times. However, on their lunch and break times, there's pool tables, there's a fully fledged Domus Cafe, who is our company. So the guys are really well worked after. And the most unique thing, which is something you probably don't know about, and is why we do it, is the industry pays monthly. We pay our construction workers every 2 weeks. Now, what that does during pandemics, during absolutely everything, Christmas periods, holiday periods, is fantastic. So there's such a want to work for Domus side of things. Now, just obviously mentioned two different companies there. Salboy ourselves, self-funded developer based in the Northwest. The reason we're self-funded, we're 50% owned by a chap called Fred Doan and Simon Ismail. Fred is Betfred, so it's obviously a multi-billion pounds company based in the Northwest in the UK originally. So that's how we're able to be in a slightly different financial position than everyone else. So Domus was then born as the construction side of things, because we like to have that start to finish control element. However, on the sales side, we work with preferred partners, and as you can see by the amount of attention to detail that Lewis and Michael have put in, API are one of our favoured partners. So that's absolutely massive for us, because we deliver projects early and on time as we can, because we're self-funded. We have our own construction company, so again, there's that control element, and we've all heard horror stories where things aren't being built and the developer blames the managing agent blames the funder, everything like that. We are all of the above, so we take that kind of hassle away. And again, Michael alluded to it earlier, which I'll come on to in a second on the development side of things, but they were at the forefront of our local Blackfriars development that's next to 55. Absolutely smashed it out of the park, worked with us very, very closely. So that's why, again, they're obviously able to bring an act on behalf of Holborn and bring these people to the table on the financial services side, with the peace of mind knowing that the products are going to be delivered to a certain standard as well. You've got that. Next.
Thank you, that's great.
No, of course. So this gives you a quick overview of our portfolio. We're very, very different in what we do. We've got three facets to our business. So we've got the development arm. We've also got the lending arm, which is probably one of the biggest parts. Salboy originally started as a lending company, a small bank effectively. So we used to fund smaller developers, be it a 20-storey apartment block or a 500-storey house and development, something like that. We would come in and fund it. Now, the issue when you fund things, if you don't control it on the construction arm and the sales arm, is we don't get our money back. That's the reality. So the decision was made very early on for us to do the whole thing. Hence why Salboy was born, and then Domus from there. So we've got a wide range of stock. So we've got the Salboy home side of things that builds bespoke developments on the housing side of things for owner occupiers. However, what we do is we build fantastic investments that make great homes as well. So where, as I say, Michael has helped us in the past, not just Michael personally, Lewis, I promise you, he might say that he does it all, but I'm sure from there.
He does exactly.
Our local Blackfriars one that you saw at the bottom there, that was 399 units in Salford. What we make sure we do, and I'm sure Lewis, when he goes back to the aerial shot at some point, is with the amount of regeneration that has been going on in Manchester and Salford over the years, we make sure we're at the forefront of it. So as soon as the ring road, you've got local Blackfriars, all the regeneration is away from there. With the local Crescent development, you've got the Crescent master plan, as Lewis alluded to as well, where there's about £1 billion being spent all towards Salford University, Media City, our local Crescent development right at the start of that. So we always make sure that we are at the forefront of it, and we're able to do it better than anyone else as far as we like to say. We build luxurious high-end apartments and homes, higher ceilings, floor-to-ceiling windows, all these things that keep tenants. And again, as the stats came from the guys, it's very easy to get a tenant in Manchester. It's because you see the demand that we've got. It's very hard to keep one, and that's why we're constantly evolving in the products that we do. We build cracking amenities, and I know I'm not going to give away the goalie here and before the guys talk about 55, but I'll talk about previous developments. But we make sure we have the gym element, we make sure we have the concierge element, the yoga studios, the breakout working spaces, and as sad as the pandemic's been, it played into our development's hands a little bit, because we'd thought of this concept 4 or 5 years ago to bring there. So with that in mind, it's the tenant profile is usually sub 40 years old, working people. As you saw, 80 out of the 100 FTSE 100 companies have got offices in Manchester. As of next year, that'll be 82 actually. There's a couple of other ones to be added to the list. But again, that's the kind of demographic and tenant profile you're looking at. And young men and women are quite lazy when they come home from work if you're sub 30 years old, because you've got nothing to do other than go out and have a nice meal and drink and look after yourselves and keep fit. So that's why we build these amenities. We've all been in a working environment where we've worked 10, 12-hour days, come home, and the last thing you want to do is jump in your car, go to the gym, go and do laundry, go and do whatever. We have laundrettes, we have yoga studios, we have gym, and that's the kind of thing we want to do. It's a lifestyle choice to live in our developments, but the main thing is they stack up. And just on the occupancy rate of local Blackfriars across the road, I spoke to the block management company local who do it, and that's currently running at 89%. And in the summer, considering with the amount of foreign students that may go back to where they live, along with ends of tenancies and things, that is absolutely phenomenal for a development that's been going for 2 years. And again, API massively sold that for us and helped on the partner side.
I've got to ask the question, that poor pub sitting there, is that listed, or they just forgot it was there, or is it that popular?
So perfect time to ask me. The Blackfriar pub was a bit of an institution in Salford, and it was burnt inside with a really bad fire damage. Now that was a car park when we took over it. As of Monday, as in 2 days ago, we actually opened it for the first time in 20 years. Now it is a bit of a mix of everything. It's got a touch of the spinning fields about it, which is your nice flashy a la carte menu, but it's also pays homage to the pub itself. We have the Blackfriar burgers, the old Boddingtons on tap, the good link with Manchester beer, everything like that. So there's something for everyone. Now, what that's done is elevated the development to the next level. Now, that concept's never been done before. We didn't want to look after the pub effectively. We were always going to make it a pub, but pass it on. But the way the pandemic's been, we now have a little bit of an F&B arm in Domus through the construction, so the food and beverage. So the likes of our sites that are to follow in the future, we will make sure that when we're building the amenity, there is an area for that type of cafe, restaurant type thing, which again, breeds into that mini London culture. You know what it's like. Everywhere you go, it's that eat out. It's cheaper to eat out than it is to eat in some places. So that's the kind of, we're constantly evolving, and we're constantly falling into new things. But where we're very, very fortunate with being self-funded is that we can try these different things, and touch wood, the concepts have been really well received so far.
And the pub's going to be directly over the road from your new site, so it's even better.
40 yards, literally you've got a road over the road, so you've got 40 yards. So more than welcome when you guys send everyone over to come and meet myself and show them everything. I'm more than happy to take them for a drink. I
will take you up on that. So Lewis, you're going to give us a little bit more, are you?
Yes, thank you very much. So just to go into the development, so as you can see, 55, it looks beautiful. It's an attractive development. What really blows it away, like Sam mentioned, that Salboy offers the amenities. So what I'm going to do, I'm going to show a video and showcase the internals as to why 55 is such a good development, the high spec and the quality that it comes with. But just before that, just so you can see an overview of the area. You can see directly in the middle here, we've got 55 Queen Street, the tall grey building. To the right of that, like we just spoke about, you've got the Blackfriars, and the little brown brick building in front is the pub, like Sam said, has just been opened this week. Just so if anyone on the webinar is not really familiar with Manchester and the city centre in general, diagonally to the left behind 55, the tall yellow building, you've got the Arndale Centre, which is the main shopping centre within the Manchester city centre. So it really gives a feel as to how close we are really to the city centre, the hustle and bustle, the supply and the demand essentially. We've also got near the development, or not far from 55, which I'll go into when we look at the location map. Like I mentioned, Spinning Fields, the more high-end, the a la carte section of the local Blackfriars pub. That's where you get your high-earning young professionals, your bankers, your lawyers that are going to be out and about. So from a location perspective, it's situated perfectly.
Lewis.
Yes.
I thought maybe Wonderwall by Oasis next time. Sorry.
So as you can all see from the video, the quality and the high spec that Salboy deliver, is second to none. From a location map perspective, like I've just mentioned, 55 you can see here within the Manchester Ring Road, situated. You're a 4-minute walk into Selfridges in the city centre, and like we've seen on the previous picture of the skyline, the Arndale Centre, which is your main shopping area for Manchester city centre. Just south of the development, like I said, you've got Spinning Fields. Like I said, this is where your high earning, your young professionals are, which is the ideal tenant that we're looking for. We're looking for guys that are going to be, secure job, looking to stay there for a long tenure. So like I said, from a location perspective, it's absolutely ideal. Just on the key details, it's a Q4 2022 completion. So it is an off-plan development. You to buy now, we're completing the end of November 2022. What's important to note is the ground rent. It's up to the required standards of 0.1% of the purchase price that's paid. Now, what's very interesting about Salboy, and I'll hand back over to Sam just to explain this in more detail for everyone that's on the call, is that the deposit is 100% protected.
Yeah, no, thanks for that, Lewis. That's completely true. So the reason we do this more than anyone else, first of all, look, we're on time for Q4 2022. Blackfriars across the way was actually delivered 6 months earlier. However, we understand that clients take time, obviously, especially with Holborn assets in terms of getting funds ready at certain times. So there's never a pressure from that side. However, yeah, the deposit is fully protected because the Betfred Group, as I say, with Fred, they're worth billions. So what they do is they personally guarantee. Now, again, not to go on to it, but you've heard lots of horror stories in the past where developments are run out of funding or construction stopped for materials, these sort of reasons why. We eradicate that. And the main thing, that the biggest thing for me more than anything with that is that peace of mind and the deliverability. If we sell 0 units or sell the 220, we're building it regardless because the funding's already there, and there can't really be a better peace of mind than that. And again, going through the very vigorous 121 point checks that these guys do, trust me, the amount of paperwork I have to send through before we get the okay, but I would rather work with partners like that because it shows that they've got the client's best interest at heart. And look, for us, reputation is absolutely everything. That's why we build at this standard. That's why we make sure we work with partners that are up here. And obviously the clientele that purchase and live there have to be up there as well. And that's what we expect.
So just to sort of simplify it, I think it's safe to say, there is no risk to the clients whatsoever. Would you agree, Sam?
Yeah, look, there's always an element of risk. I'll never ever say that the case with anything. However, no, in terms of the funding arm, in terms of the selling aspect, no, there's not, because it's the deliverability is there. We have the best track record, and something else that obviously we don't shout about too much because we should, to be fair, we also build for competitors as well. So there's a couple of other people in other cities, Sheffields, Birmingham's, even in Manchester as well. We have competitors who are developers who are building developments in different locations of the city that are asking Domus, our construction company, to build because of that deliverability. Now, that is an amazing thing for us, and we're very, very proud of it. However, for a true Salboy project, and that's 55, Blackfriars, Local Crescent, Viaducts, everything that's there, we only put our name on something from start to finish, and as long as it's position A. Do you know what I mean? That's the reality of it. And look, I know with the guys, they sell for other developers and have great relationships there, but they can vouch for that. We build for other developers, and that's testament in itself.
Yeah, thank you. And then just moving on from a next step stage, if you were to decide you wanted to purchase a 55 unit, it's a very simple process. There's an initial reservation fee of £2,000 that secures that particular unit that you wish to choose. We then require proof of ID, so a passport, proof of address, i.e. utility bill, and then also proof or evidence that that £2,000 has been sent over. So that's just to initially lock in the development for yourselves. Just to actually going on to the development now and in detail, the high spec, the high quality that it offers. As you saw from the video, it's got a rooftop garden, okay? It's got a cinema and it's spacious. I think what we've seen, I'm sure Mike will agree with me, certainly from an API side of things, over the last 12 months in particular, is that clients or investors and tenants have wanted space. They've not wanted to be locked up in a box room in small apartments. They've wanted a development that not only has a spacious apartment for themselves, but also has spacious amenities, whether that be a working area, whether that be a gym, a cinema, the rooftop gardens, somewhere where you can actually go out of your apartment door and you don't just have to be walking up and down the corridors. You've got somewhere to go and work from. I think, when we've noticed certainly in the last 12 months and the work from home culture where, people are now doing 3 days in the office, 2 days at home, you want to have that ability to get up, stretch your legs, go for a coffee downstairs, go to the gym on your lunchtime and, not feel like that you're wasting your day. So certainly from a development perspective, the space and the high spec that Salboy deliver, like I said, is second to none. The different type of units that we've got 1 bedroom apartments, 2 bedroom and 3 bedroom apartments, as well as duplexes. The 1 bedroom apartments start at £163,000, the 2 bedroom apartments start at £246,000, and then the 3 bedroom apartments and duplexes start from £315,000. Now you can see here an example of one of the apartments. They're spacious, but what makes it really attractive is the floor-to-ceiling glass. It gives you that that feeling that you've got more space, you can see out across the city. And again, if you're locked up at home like people have been in the last sort of 12 months, it gives you that sense of freedom as well. You can also see from the quality of the inside that, you know, what Sam says is that they are delivering from the high spec. Here's an example of one of the duplexes that we've got. So you can see there's an abundance of space. Again, glass from floor all the way up to the top floor, ceiling, as well as a large balcony. So, you know, if you do want to get that fresh air and that sense that you are being outside and not being locked up, you've got the ability to go out and enjoy the freedom and the Manchester city views as well from there. We can see here there's an internal spec, so you've got obviously the lady there walking from the gym with her yoga mat. To the left hand side we've got the working area, the space area, you know, we can get your coffees. You can work from there as opposed to being locked up. Again, everything that we're talking about now is all to do with space and really people's mental well-being. I know a lot of people didn't like being locked up, so it's the fact that you can have a development that gives you that freedom has certainly aided the investment case behind it. Here's just an example of a couple of the apartments and the layouts and the size. As you can see from a one-bedroom apartment, 52 square meters. They're big one beds. You know, we look at some developments in other areas, in other cities. You get 2 beds for that size. So the size of the apartments at Salboy are also delivering not also the high quality spec, but also the size of them is what people are after. They're large units. Again, the left-hand side, we've got the duplex, and on the right-hand side, we've got the amenities in the communal area. So you can see you've got the cinema, you've got the fitness studio, you've got the cafe, but you've also got that breakout area where you can go and relax and work from home, albeit not at home. Here's an example of some of the units that we've got on offer, a mixture of 1 beds, 2 beds, duplexes. You can see, again, the size per square foot, they're all large units, and that's then reflected in the rentals as well. We're looking to achieve anywhere between 4 to 5% net yields, which again, like Mike said, in the, you know, why invest in property? We not only look at capital appreciation, but also we look at yields. There's not many investments where you get both from. So as well as achieving an attractive appreciation over 5 years, like Savills have touched on, we're also achieving that passive income as well to cover all costs plus more to make sure that you're going to be a minimum cash flow neutral, but 9 times out of 10 cash flow positive. And Chris, if I could just hand back to you, please.
Well, between the three of you, you've answered everything because questions have come in and you've covered them anyway. So there's no time for questions and answers anyway, but fantastic. As Mike said right at the beginning, they've got offices everywhere. So get in touch with their API guy, wherever you may be, Africa, wherever, and they can give you details. Sam, yep. Really enjoyed listening to you. Thank you very much. I will be, how close is this development to Deansgate?
It's literally up where Lewis mentioned, literally Manchester's 2 bookends from the Arndale Centre and Beetham Tower. It's a 6-minute walk to Deansgate itself. So you can literally see it from the development. Okay,
that's for Zahi. So as I say, you've got offices all around the world. This is being recorded. So if you missed a bit, then we can send you a recording as well as other recordings from previous webinars. So thank you, everybody, for joining us on Property Thursday. See you next week. Michael, enjoy isolation. I think it's the best place.
Thank you, Chris. All the best.
Sam, I'll see you in that Blackfriar pub. And Lewis, I'll probably see you out there. So thanks, everybody. Thanks for joining in. Thanks for sticking with it. See ya.
Cheers, guys.
Cheers.